Okay, so if you look at questions 4, these questions, they talk about my life. This company, okay, they carry on a retail business. So you get an assistant. Every week you pay 50 ringgit, okay, per week. And you start to work on Monday, 30th, 31st of December. Means, okay, on next year, after 4 months, 3 months, okay, this assistant did not report to work, and it was found that he has left, taking with him the balance in the till. Till means the cash register machines, cash till. So the money in the cash register machines all has been stolen by this person. So, okay. Now, next thing is this one. The owner have practiced to bank in each Monday morning in the balance in the till resulting from the previous 13 weeks. So means that this person basically has been practicing working with you for 13 weeks already. Now the owner, every Monday morning, they will bank in all the money in the cash till, okay, in the cash register machines. No float was maintained, okay. Next, the only record kept by the owner, apart from the bank statements, is that cash. Here you have a sales on credit and unpaid invoice. Okay. Okay. Next, so this is your sales. This is your purchase. Having instructed, they want to find out how much the assistant have stolen your money. So you need to figure out how much is the defalcations. So this is a balance sheet on last year. Okay, last year. So now it's on 1st of April 2011. Let's say 2021, 2011. So here, opening, you have all this figure. So this is current year opening, guys. Okay. Then analysis for the last 13 weeks is like this. You have opening, you receive money from your debtors, receive money from cash, debit, you credit your cash pay here. Remember or not? Your owner, they will bank in the cash balance from the cash register machines to your bank. So this is the contra. Okay, this one is a contra. And then this is your payment from to your creditors, rental expenses balance. Okay. Now, before paying the balance in the till, the owner will pay the assistant and took 100 for himself every week. So this one means that every week I have to pay assistant 50 times 13 weeks, and then 100 for myself, 13 weeks. So this is the money that is in your cash register machines every week that I will be taking out. Okay. So this one is your salary. And here is your drawing. This is wages and salary, guys. Wages and salary. And this is drawing. So petty expenses paid out from till, including social insurance, could be assumed to average. So here you got insurance expenses. Every week is 20 times 13 weeks. You know why times 13 weeks, right? Because now it's on 1st of April 2021. Your company start to work on 30th of December 2020. So from there until here is only 13 weeks. So we only calculate 13 weeks. You don't calculate one whole year. So here 13 weeks. Every week you have this. So total amount is 260. Okay. Now inventory taken at the commencement of business last year. They give you this 900. It can be assumed that both at the beginning and at the end period was correctly. Okay. So inventory, if you look at here, this one, this is your closing inventory on 1st of April, and this is your opening inventory. Guys, okay? So this one here, because look at the date, this is on December before you start. So here, this is your opening inventory. Okay. And then here, this figure 900, this one is your closing inventory. Okay. next. On trade receivables notebook shows that the sales on credit amounted to 900. Okay, sales on credit. So this is your sales. Okay, then trade payable has always been paid by check. Okay, trade payable on 30th total 2000. So this is your carry down balance, CD for creditor, CD for creditor, and you have others payable. Others payable is 200. But if you look at here, payable, trade payable, you have this amount. Debtors pay. This is their payment because this is bank statement. And then if you look at opening here, this is the opening capital, opening trade payable, and opening payables. So if you look at this, opening payable is 250, closing payable is 200. By right, you have paid them. Pay here, but if not in the bank statement, means you have paid by cash. So this one will open an account later on. I'll tell you what's going on. Key account is needed. Now the closing trade receivable, if you look at here, trade receivable opening is 860. Okay. Then here closing trade receivable is 500 to be 840. They have not account for a cash refund. Means not account means you have not record a cash refund of 120. So record later in your when you open your key account for trade debtors, will record this 120. Okay. Now here there was a fixed markup of 25% on cost. So all your sales will be 25% on cost markup. It will be marked up by 25%. So this one 990 supposed to be 125% of cost. Insurance company have agreed to claim for the amount of defalcation as established by you. So means that this money loss is no longer your expenses. Later on, you have to figure out how much is your loss first. Then the money that you lost will not be your expenses because insurance company has agreed to claim for the amount established by you. They agree to pay you the money. So you won't have this amount of expenses for the defalcations. Okay. Now, first thing, what should we do? You look at here, so many informations. Okay. So you cannot do one account by one account because the account is linked to each other. Get it? You get what I said? This account, like for example, cash account is linked to your debtors account. Debtors account is also somehow have an effect on your creditors account. So we will do it together. This few account, you will do it together. So we open the cash account first. Now in your cash account, this one. Okay, in your cash account opening, if you look at here, opening in your cash is 570. So you have a BD. For sure, you need to open a cash account because your money, cash has been stolen, right? So cash account is a must. Okay. Then from here, you know that you have this contract. So this one we put in first. Directly, we know we put in first. Okay, so bank 10290. Okay, and then if you look at the rest before paying for the till, you have wages and you have drawing, right? So this one we'll put in also because these are informations. So wages you'll be 13 times 50, so 650, and then you have also the drawing. Drawing is 13 times 100, so you will have 1,300. They says that you pay insurance, right, every week 260. So we say from petty cash, right, petty expenses. Okay, so here you have a petty cash. Some of you write insurance. I also accept. Okay, so petty cash 260. So here, okay, next. Number 3 done, 4 done. Inventory, this is opening inventory. So this one you'll use when you calculate cost of sales later. So trade receivable, trade payable. So far here you got no other informations. no other informations except here, cash refund. Alright, so if you remember, cash refund received. So received from who? Have not received. Okay. Cash refund received 120. You receive a cash refund from your payables. Get it? So next one. So this one also done. So if you look at this from the information here, basically you cannot figure out any things to put in here anymore. Right? So next you need to open another account. Is your debtors account and your creditors account. Okay, so with debtors account. So debtors account, if you remember the opening, so just now opening is 860. So here you have 860. And then you check debtors sales is 990. So you have your credit sales. And then debtors, so this one done. It's done. It's done. Inventory, trade payables, nothing to do. Closing balance. Okay, fixed markup. Now, next thing, if you look at here in your bank account, they say debtors pay you 450, right? So it means when you come to here, debtors, you have a bank 450. Are you guys okay? Bank 450. And then if you look at here, just now here, the closing for receivables was found to be 840. So this is your debtors closing. So now you have a carried out balance 840. So if you try to balance that, you'll figure out you cannot balance. Are you guys? If you try to balance here, you'll have 1850 and here 1850. But then the total you'll have missing out 560. So this 560 for us, this will be your cash figure because now you're looking for your cash stolen. Okay, cash stolen. Now some of you ask me whether is this a bad debt or is this a discount? But by right, this shouldn't be a discount or a bad debt because the questions never mentions that in your questions. If this is a bad debt or a discount, then they will let you know. So your payables, you have two payables account. I don't know whether you remember or not. You have trade payables and you have other payables. Right? Okay. Trade payables opening. If you look at the questions opening here, you have payables 2470. Others is 250. So here you have 2470 BD, and here BD is 250. And then from the question two done, this inventory nothing to do with us yet. Okay, the trade payable has always been paid by check. That means other payable will pay by cash, huh? So here the total amount year end is 2008. So this you carry down. Total for this other payable carried down is 200. So this one 200. Here 2008. So since this is a payable, means that on this side you will always have a purchases. Remember or not? Purchases, because payable, right? You're buying from them. But do look at the informations here. So this one done. Number 7 done. Closing, this is done. Have no account for a cash refund receipt. Cash refund receipt from your trade payable. They pay you. If you receive a refund, you will not receive from your debtors. It's always received from your creditors. Remember or not? Who will pay you money? Only your creditors will pay you money if it's a refund. So here, cash refund, cash account lah. Okay, this is for refund 120. Okay, just now double entry. We already record payable. Okay, so number 8 done. Markup, nothing. Okay, so here, if you look at this, in your bank account, here we have a trade payable 9370. Okay, 9370. This is bank. So means that this one is a balancing figures. Are you okay? So here, if you total up is 12170, it should be 12170, right? So if you minus out 12170 minus this, you should get 9580. Okay. Now this has nothing to do with cash account, but if you look at this, the balance normally, if here means that you pay them, because question never mentioned anything. Sorry, it should not be inside cash here. So difference by 50, right? So means that you pay them. Are you guys clear? Because if on credit side, maybe there will be other items if you increase, but now it's decreased. So this side, you have a 50 payment, 150 here. So this one, you add on another 50, other payable. Guys, okay? Now, sales, right? If you look at here, your sales are not cash here. If you look at this, you will still have normally, let's see, you got any other things or not. If you try to balance, here, total up, let's see. Okay, now what is the thing we haven't go through is this. You need to check the difference is too much. Okay, if you look at here, the difference is too much. And then the question is asking about cash defalcations. Means that you have balance here, for you to have stolen. Okay, but now you can see that this side you have a lot of missing figures. So now what we need to do from the information that we have is we can still figure out for the sales. Okay, so if you want to look for the sales, first we know that our whatever information we have here, here if you look at this, you don't know how much is the sales. Okay, you don't know how much is the sales, but you know you have a credit sales. From the questions, we know we have a credit sales. Are you okay, guys? And you know that your gross profit margin, is 990. Okay, 990. So we need to figure out your cost of sales. Okay, we need to figure out our cost of sales at this moment. So cost of sales, how to find? Opening plus purchase minus your closing stock. You get your cost of sales, right? So from here, first thing we need to calculate our cost of sales. Now we want to look for the figure in your cash book. Okay, now we want to look for the figure in your cash book this side. Now only thing that you increase your cash is only sales. But the thing is, we don't know how much is your sales. But we have this information, markup information. So from this markup information, we can figure out our sales. Okay, so we need to figure out our cost of sale first. So opening plus purchase minus closing. Opening less from questions. If you look at here, questions, opening inventory 1720 plus purchase for the year 9580. So you have 1720 plus 9580. Okay, so total is 11300 minus your closing stock. Okay, so just now closing stock is here 900. So use up this one. So minus 900. This is your cost of sale 14. Okay. Now questions mentions this one. based on your cost of sales, your markup, a fixed markup on 25% on cost, right? So when you do, then you will know. My cost of sales, okay? My cost of sales is 1040, okay? This is 100%. Now I have to mark up another 25%. So mark up another 25%, mark up, it will be 2,600. So these two total up become my sales figure. Okay, my sales will be 125%, based on this formula given. So total sales is 1,300. But bear in mind you have a credit sales. Just now in your debtors account you have a credit sales. From the questions we know that your debtors account you have a credit sales of sales on credit 990. So minus out your credit sales 990. The balance will be your cash sales. So if you look at here, balance is 1, 2. Okay now guys. So 1, 2, 12,000. So here, cash sales 12,000. Okay. Then the balance by right here after you top out everything. Okay. After you top out everything, then 1, 2, 3, 4. Okay, after you top out everything by right, you should have a CD in the normal conditions. You should have a CD. But in this case, you don't have a CD because all the money by right that you have has been stolen. So this one we don't call it carried out, we call it defalcation. Get it? Okay. So if you total up, here is 13,260. Here is 13,260. And if you minus up, you'll be able to see defalcation will be 710. If this all okay, next thing what you need to do is prepare your income statement and financial positions. Okay. Just based on the information here, then you try to prepare your income statement and financial positions. Most of the thing you need to know is here you will have expenses. You will have these three expenses. You have wages and salary. You have insurance, and then you also have here rental. This one rental. So you have 1 rental, 2, and then these three expenses. Okay guys, okay? And then cost of sale just now we already calculated. Total sales is 13,000. Then here is your cost of sale, you get your gross profit. Then minus these three expenses, you get your net profit. Okay? So from there, you prepare your financial positions. Financial positions, then you will have your fixture and fitting fixed asset here. Okay, FA. Then you have your current asset. Current asset, if you look at this, bank balance is 0. You will have no balance in bank, but you will have cash balance is 0, sorry. Cash balance is 0. You have no balance in cash, but you will have balance in which this defalcation, this money. If you lost it, insurance not cover, then this is your expenses. But in this case, the number 10 we haven't used, right? Insurance say that they agree to a claim of the amount of defalcation established by you. So this 710, is a receivable because insurance agree to pay you. So you're waiting for insurance company to pay you this amount. So this 710 is a receivable. Okay. So next then you will have your inventory, trade receivables, this 710 receivable and bank account. Then capital, opening capital you have here, okay, plus current year profit minus the drawing. This drawing 1,003, okay, and you have other payable. Payable, you have other payable here is 2,008 and this one other payable 200. Total payable is 3,000. Then that's it. Prepare your financial positions. So far you okay?